Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 19th of September 2020 and we're publishing our gold and silver weekly update for the week ending the 18th of September. Now before we cover gold and silver prices, we alert you to the video we published yesterday, which really acts as a precursor to today's video, and that's entitled Friday Night Update FOMC Aftermath. And we place links to this video podcast in the description box below. It is short and will fill those details we may not have included in today's video. Now gold rose $9 last week from $1,941 to $1,950, having hit a high of $1,973 and a low of $1,933, a rise of 0.5%. In sterling terms, gold finished the week at $1,509. That's down £7, or 0.5%. And in euros, it closed at €1,647. That's up €9. Now, silver rose 7 cents, from $26.76 to $26.83, having hit a high of $27.64 and a low of $26.36, a rise of 0.25%. In sterling terms, it closed at £20.77. That's down 14 pence, or 0.6%. And in euros, it closed at €22.66. That's up 0.06 euros. The gold to silver ratio rose slightly from 72.5 to 1 to 72.65 to 1. Bitcoin is up $533 at $10,863, or 5.2% rise. Now the Dow Jones closed on Friday at 27,657. That's down 244 points on the day and down just 8 points on the week. With such moves seen last week, it's surprising to find that at the end of the week the Dow was very similar to its opening price. The S&P 500 closed at 3,319. That was down 37 points on the day and yet down 21 on the week. And the Nasdaq closed at 10,793, taking a bit of a hit on Friday of 117 points and down overall for the week by 60 points. Now oil fared a little better. Brent crude closed at $43.15. That's up $3.32. And WTI crude closed at $41.11. That's up $3.78 on the week, both of which more than making up from the previous week's falls. The dollar index stands at 92.92, and that's down 0.41 points on the week. So the dollar's still marginally declining, though it keeps vacillating between the 92 and 93 level. Now, our conclusion over the past few weeks has been that we expect gold and silver broadly to be range-bound, with gold moving within a reasonably wide margin of between $1,800 and $2,000, but mainly oscillating within a consolidation phase, as we called it, at or around $1,900, though it's been at the upper end of that during the course of this week, and silver prices ranging between $26 and $28. Now this is still clearly proven to be the case, with gold moving this past week between a high of 1973 and a low of 1933. So in the upper echelons of that 1900 to 2000 level, and silver between $27.64 and a low of $26.36, again well within our $26 to $28 level. Now this past week we have had a few potential opportunities for precious metals to break out of these ranges, particularly silver, but they did not do so. You see, economic developments and reports and the central bank's position announced on Wednesday have to some extent not caused the panic or concern in either direction, which perhaps a number of analysts were expecting to cause. Now, from a technical analysis point of view, gold prices or gold price futures suggest that a breakout to the upside could occur should gold surpass $1,984, and a breakout to the downside should it fall to 1938. Now one can see what an incredibly tight range this truly is. So our 1800 to 2000 level more than covers the most likely range, not only for the past few weeks, but quite possibly for the next couple of weeks too. Now looking at the technicals short term, we can see that we have resistance at 1967 and then at 1982, and support at 1957 and 1948, and for Fibonacci fans at 1939. Again, more or less in that sort of upper three-quarter quartile, if you can have a three-quarter quartile, of $1900 to $2,000. Medium-term momentum has turned positive, while short-term momentum is broadly flat. This is why we see a continuing of range-bound prices, all things being equal, and no black swans swimming by or unforeseen major political announcements being made. Silver is operating well within our target range, with support seen at $26 and quite significant resistance at the moment at $28. Again, we see this continuing until such time there is a major economic announcement or significant stimulus package given, or the US dollar weakens considerably more than it has so far recently. The general consensus from our personal polling of a number of people in the analytical field is that we shall see higher silver prices in the not too distant future. But of course, as always, the question is when. Now, as mentioned earlier and last week, there were several important economic data points, the result of which, quite frankly, were mixed. Housing starts were disappointing, while jobless claims and consumer interest figures, or index, were more positive. The Fed's comment on interest rates and QE, in our opinion, was actually a little more confidence boosting, though we admit quite a few analysts will disagree with that assessment. When the FOMC truly has so little room to maneuver, we felt they pulled off their announcement pretty well, without causing the dollar to enter into a tailspin, as there is at the moment very little to suggest that the dollar should strengthen significantly from here, save perhaps other currencies weakening because of their plight down and due to the coronavirus spread. Now, taking a look at the US economic data to be announced this coming week, on Monday we have household debt for quarter 2 and the Chicago National Activity Index for August. On Tuesday, existing home sales for August. Wednesday, a little perhaps more important, the market manufacturing PMI for September and the market services PMI for September. On Thursday, weekly jobless claims report and new home sales for August. And then on Friday, the durable goods orders for August and core capital goods orders for August. So we suggest that Wednesday and Thursday are perhaps the more important data days, with, as always, eyes closely being set on the employment data in particular. Now, it's our view that the coronavirus is still a major factor in terms of dollar value and therefore precious metal prices. With 30.8 million cases worldwide and 858,000 deaths, and the US still averaging close to 1,000 deaths a day, this undoubtedly is what is having the major impact on global economies. The UK has warned in the last couple of days of a potential national lockdown for potentially up to 2 weeks for some time in October, though some medical experts are coming out saying that may be too late. Maybe it has to be brought forward. And other countries like India, seeing their cases absolutely soar. It truly is difficult to assess the full impact all of this will ultimately have on the global economy. Now, the US obviously still have a stimulus package issue to sort out between the Congress and the Senate, otherwise home repossessions and, frankly, civil unrest will increase substantially. And so will many small businesses, as well as some large ones, find themselves going to the wall, if they haven't already done so. perhaps in their tens of thousands as far as small businesses are concerned. And this does not augur well for the employment figures in the short to medium term. Some, we've seen, economists have argued that perhaps we've already reached or are very close to the peak of employment recovery. Though we aren't fully convinced of that quite yet, but we can see the point they're making. We do see, however, in the United States especially, the presidential election run-up proving to be a major destabilizing force, as the partisanship within the United States is clear for all to see, and the level of militancy, threats and legal actions increasing, with much more and perhaps worse actions to come. All of this will simply serve to destabilize the economy further, at least short term, which is why we're still bullish precious metals. Not as much as the pumpers are, but enough to say one should consider buying on dips. The situation with China is far from resolved, and we're going to see in the coming weeks perhaps a level of turbulence not encountered for many, many years. So, until that all occurs, please share your thoughts. And thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Meanwhile, we wish you a safe and enjoyable weekend ahead, and a safe and prosperous week to come. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.